What's up, everybody? Today, I want to talk to you about the most interesting thing about trading that I didn't really realize until recently. And in trading, there's a lot of uncertainty, and there's a lot of things that could go wrong. You can lose money, you can make money, you don't know what's going to happen. There's so many unknowns in the market that it's enough to drive you crazy. You don't know if it's gonna be a 3% day, a 10% day, a 1% day, a, a flat day. You don't know if you're gonna lose a ton of money or a little bit of money if you're not properly managing risk correctly. So all those things you can kind of estimate what's gonna happen if it's gonna be a large or small day. But what I mean by that is it gonna move up a lot or a little bit, or down a lot or just a little bit? But given all those different types of things that go on this in the market, what news is gonna pop up, you can kind of get it. But here's the one thing that might help you, and it's the one thing you know for sure, and it is pretty much guaranteed. Something that is certain in the market when everything else is uncertain is the amount you're going to lose. And that's very important. Think about it. If you know how much you're going to lose, isn't that going to help you put on the trade or not put on the trade? For instance, if this trade, I'm putting on a trade and it costs me $20 if I lose, but if I'm gonna potentially make $200, it's worth it. It's more than 10x. It's about 10x. 10x is 1,000% return. It's a lot. So when you look at that type of risk reward, then it's worth it. So be certain of the amount you're gonna lose. And what comes with that is you gotta know exactly where your stop is and where you're gonna get out and have an idea of how much it's gonna cost you. It's easier for trading equity, trading just stocks by themselves. With options, it's a little ambiguous, but practicing kind of gets you familiar of how much a move against you will cost you, how much a pullback will cost you, how much a breakout will cost you. And you start getting the sense of like, okay, it's gonna cost me this. So it's pretty certain the amount you're gonna lose. It's not certain like exactly for options. For stocks, it's pretty straightforward. It's very liquid, so it's easy to get out. With options, not so much. But still, at least you're certain certain about a range of how much you're gonna lose. Like I'm certain I'm gonna lose 20 to 30 or $40. But I always try to accept the max. Okay, it looks like I could lose 20, but the max could be 40. So if I accept 40 to lose 40 in order to make 200, now you're willing to put on the trade. But you gotta accept that you're about the certainty of losing. So another thing is to expect to lose. Go in it with expecting, no matter how delicious and perfect the graph looks, the technical analysis looks, if it doesn't work, you're gonna lose money and you gotta get out. What happened to me, I would look at it, it would look so good, and because it looks so good in my mind, oh, it's gotta work. It's perfect. It's perfectly gonna work. There's no way it's gonna fail because it looks so perfect. But when that happens, I don't put a stop, and I'm supposed to. So even if it looks perfect, put a stop, expect it to lose. Don't have a wishful thinking or conviction that it's gonna work, because when it doesn't, it's gonna hurt you and you're gonna feel betrayed, and then you're gonna revenge trade aggressively, putting in more money than you're comfortable, and then lose more, and then by the end of the day you're down $500. or more. So lesson from this video is one, remember that the max loss per trade could be known. It is certain. It is certain. It is certain. It is certain. You are certain of the amount of money you can lose per trade, and you accept it. That's number two. You accept it. You are certain of the amount you're gonna lose. You accept the amount you're gonna lose. And what was the third? I blanked out. And then you don't. You expect it to lose. Certain the amount you're gonna lose. You expect it to lose, and you accept the loss. You accept if you lost. So by expecting that you're gonna lose, you accept the cost that you're certain of that's gonna cost you. So those three things should help put on trades. And I'm not telling you these three things are gonna make you profitable, because they're not. When you're starting to trade, you're going to lose money every single time until you get it. What does it mean to get it? When you develop a strategy that works for you, people trade differently. People trade years at a time. People trade days, months. Some people trade seconds. I trade like seconds. Sometimes I hardly do minutes. Most of the time it's seconds. Right now I'm at seconds because I can barely hang on. So I'm getting better. I'm working on it to develop my trading, and eventually I'll get to be able to hold for minutes. And days, I don't really look forward to day trading. I mean, swing trading. I don't, especially with options, unless I'm doing earnings, high probability earnings. Right here's a list of stocks that kind of gap up a lot during earnings. Then I could do a strangle, and that might work. But that's the main takeaway from this video. As you're trading, trade small. Trade a small account. I trade with a $1,000 account, and I go in with one contract at a time. One contract at a time that costs less than $250. The $300 ones I don't really go for, and I mostly trade SPX. I do trade the dailies, the ones that expire same day. Yes, I do, but I'm trading seconds at a time, so I get out within seconds. I don't really hold for minutes. If it, as long as it's in my favor, I stay in. If it starts going against me, I get out. And I'm also working on letting it stop me out rather than getting out early, because sometimes the stock looks weak for just a slight second, and that's enough to scare me. But I gotta remember that the momentum is coming. As long as it hasn't hit my stop, I should still be good, and I should still be able to get out at the certain risk that I calculated, and I have to take it, and I expected to lose. So because these strategies, the ones I trade, is probably like they work maybe 50% of the time. So it could work 3 times in a row and then not work for 4 times, and then work 2 and then not work 1. So 5 yes, 5 no. The order in which they work is just random, but you cannot really pick and choose where the opportunity pops up. You got to make sure you just manage risk. That's your job. The job of a trader is to manage the risk. It's not to win and be right. Being right is not part of the trading. For me, at first it was. I wanted to be right. I wanted to feel smart. I wanted to feel clever. I would even try to force trades and see things that weren't really existing. So that's forcing. I have to let the trade unfold and be paying attention, focus for 2 hours. Or sometimes it just depends. I'll make another video on different types of days and what is expected of those days given the environment. Is the environment charged? What I mean, is it positive or negative? Is the news charged, positive or negative? Or is there no news? Are the technicals positive or negative? or no technicals at all. Is the gap positive or negative? Are we up or down? How far are we from the yesterday's close? And I call it the 0% line. And that you gotta compare, that to where the gap is and the environment, the technicals, the news. I have a couple other ones. What else do I have? Um, speeches from Powell, his presentations, all that could give you an idea of how volatile the day will be. Will it be the day like where the SPY moves the 2% that it tends to move when it's a big day? Or is it the day where every other day where there's no news, there's really nothing happening, it only moves 0.5% at max? So those are the things that I am working to take into consideration. There's so many things to prepare too, so I'll probably make a video on that too. So see y'all later on the next video. Bye bye.